Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is July 2nd, 2016. It is a long weekend here in the United States. We have the holiday weekend, which is July 4th. That's our Independence Day on Monday. So if you're overseas, the markets will be closed on Monday. But I want to get a video out to you. A couple things we're going to cover this week is we're going to take a look at, of course, at the economic calendar, going to look at some areas of interest, but more important, we're going to do a little teaching. We're going to talk about triggers, what could help you trigger into a trade, and how to manage that trigger. So we'll get started here. Wow, let's take a look at the economic calendar first before we get into the wow of last week. Now, last week, of course, was the week after the Brexit, and man, it was crazy. Of course, a lot of recover in this last week, and this week is going to be no different with the craziness. We have a lot of news out that we need to watch for. On Wednesday, we have FOMC minutes, which we'll find out what the meeting was all about a few weeks back, and I'm sure that will be a market mover, no doubt about it. It typically is. And then, of course, we're going to follow that up with the employment situation, which is the non-farm payroll on Friday, July 8th. So those are two big market movers. Of course, there's a couple other speakers. We have William Dudley speaking twice, and of course Daniel Tarullo. So keep an eye on those. Now, overseas, if you are a Forex trader, may want to keep an eye. I know the Australian news that's coming out. We have interest rate decision on Tuesday. We also have Draghi speech, which is Wednesday. That will be definitely watched very closely. And then, of course, our FOMC minutes here in the United States. And then on Thursday, the Bank of Japan governor will be talking, and that will probably be a market mover as well, especially for the yen. So be aware of your times depending on what instruments you are trading, whether it be Forex or futures or whatever the case may be. So guys, let's get started here. We want to talk about first and foremost last week. I don't have a profile chart up yet, but I want to show you a candle chart. We had the Brexit meeting, the Brexit vote, and then that vote and the outcome of that vote just tanked the market, and everybody thought this market was, well, almost done. And what we saw last week was post recovery, and it was straight up. And people call this a V bottom. I don't even call this a V bottom. This was, straight down and straight up. There's no doubt about it. We had 1, 2, 3, 4, 5, 6, 7 days of straight up. That's all it is. It's no way around it. And most people, there were people getting short in here, different levels, different areas, different resistances and stuff. And either they are taking a lot of heat right now, or they've been stopped out. It really depends on the it depends on the person and stuff. So this week, what we wanted to talk about, if you got hurt in this mess right up here, or you got short and you thought it was going to roll over and it didn't roll over, there's a way to control your risk a little bit. Now, again, Matt put out a video actually today, which is Saturday. It was a great video talking about not being perfect. And in the market, you can't be perfect. First of all, you have to define your entry. You have to define your area of interest. And then from that point, you have to define your risk. And when you define your risk, you have to let that trade go. You have to see if the trade will work. You have to give it room to breathe. And most likely you will take heat on a trade. Taking heat on a trade is not a bad thing. Having the direction right is what you want more so than not. So here's what we're going to do. We're going to take a look at this. There's 3 different triggers that I'm going to show you that could be handy to you. Everybody uses a different method of getting in a trade. A trigger is just that. It's a method of getting into a trade, okay, based on what your setup is. And then from there, you can define your risk. All right, so if you see something you like here, go ahead and use it. Now we're showing you, this is a 1140 minute chart, 1140, which is a daily chart. And the reason we use, on this case, I use 1140 minutes is because I like to see the overnight trade as well. included in this. If I were to back this down to a daily, you wouldn't see these candles wouldn't be near as large. Now on the other side of this, we are again swing traders, so we're going to recommend that you use trigger charts that are a little bit higher, not a 1 minute, not a 2 minute, not a 5 minute, but probably the minimal amount you want to use is probably a 15 minute. A 30 minute is probably ideal because we're looking for larger targets. Now, if you don't want that and you want to go down to a smaller time frame, that's totally your choice. Again, recommended based on the style of trade that we take here is we're probably going to be looking at a 15 minute. I personally like a 10 minute. I know that's a little bit lower, but the 10 minute seems to work out with the instruments that I like to trade frequently. So let's go ahead and let's take a look at this. We're going to drop down to a 15-minute chart here. Okay. Let's take a look at this first. This is a 15-minute chart. We can see here Friday. Friday we had another move up, and again it was right off the open. We went ahead and everything got was pushed up, and everybody thought there was going to be some close up here, and they were going to close on the highs, and then lo and behold, we did roll over a little bit, and some people started taking some profits. Remember, we were running this up in the end of month, end of quarter, and we thought maybe on the 1st of July there would be a little bit of profit taking. Plus, there was an area of interest up here that we didn't identify, but we've heard some other traders talking about. So how could you partake in this position if you wanted to get short and you thought that this market was going to roll over still? Now let's take a look at this one more time. We'll go back down to the daily here. This is the daily chart. You can see I'm missing some candles, some overnight candles here. But if you still think that this market's going to roll over and take out these lows at 41.67, then you're looking to get short. This is how you could trigger into a trade like that. All right, let's go back to the 15-minute chart. All right. Trigger one would be this. You would take and identify a recent low, okay, and that low would be taken out, and that would trigger into your trade. Once you trigger in that trade, your stop has to be above the most recent high. So let's take a look at this. Let me get my drawing tool here. All right. So recent low. Okay, now the other recent low was down here. Well, that's probably not going to be a logical trigger because your risk is going to be too great up here. So what we do is we have a move down. So what we have to be is patient to wait for a quick move down. We can't be guessing up here, and if you have an area that you want to get involved, you can take the trade at that area. That's fine as long as you have your risk defined. That could be a trigger. The triggers I'm talking about is more of a patient trigger. We're waiting for some confirmation that the market may be starting to do something in the opposite direction or the direction that we want to go. So in this case, price moved up in the morning. Then what happened was it did finally start to pull back a little bit. It made a low, okay, a new low, or should I say a lower low, and then what happened is it popped up a little bit and then rolled over and took that low out. There's your trigger right there. Now some would say that this would be where I want to define my stop. Nah, that's too tight. Matt talked about that as well. You can't be perfect in trading. There's just no perfection here. You got to give this stuff room to breathe. So we define the stop as up here. So let's take a look at what this sort of looks like as far as risk is concerned. About 44.32 is the entry. The risk would be up here 44.50, so you're risking about 18 points right here in the NASDAQ. But you have to remember, we're looking at a larger move to the downside on this case. So we defined our risks, we had a trigger, we had to wait and be patient for sellers to come in on this case. That is trigger number one. All right, trigger number two would be this. These two EMAs right here are the 8 and 21 EMA. All right, see if I can draw this. The 8 and the 21, and I'm sorry, I'm not a very good drawer with this excuse me, I can't talk either. So these are the 8 and 21. We would wait for a cross of these and then probably the first pullback. As you see, we did not get any crosses here, so If you were using that method to trigger, you would not be in a trade short at this time. However, let's look to the long side. If you believe that the long side was still valid early, very early in the morning, between 3 o'clock and 5 o'clock on Friday morning, if you were up at that time or overseas, you saw that there was a trigger right here, okay, where the cross happened. So if you were to get long during this cross or after that candle close, you could get long up in this area, and your stop would just be below this. In this case, it looks like 43.88 area would be your stop. The entry would be about 4,400. Okay, so you got about 12 points of risk right here. Is that right? Yeah, 12 points of risk. And of course, you can see we had a very nice move in the morning, and that's that would have obviously been a multiple of your stop right here. So two good trigger opportunities. Now these are with just candles. Okay, so everybody's wondering, well, hang on, you guys are market profile. What about a market profile? Yep, great question. So let's take a look at a market profile situation here. Uh-oh, hang on a second. My screen is not cooperating. See if I can get this in here. Whoops. Okay, so here's what we have. We have the market profile here. This is a daily profile, okay, and these are daily profiles here. Now you can see we have an area of interest that we had defined a week ago. It came right back into these two areas, which is 43.85 up into that 44.07 area, right? If you would have taken a trigger off the profile, you probably would not have been long in this area or short in this area. Now here's why. Here would be the trigger for a profile. Again, there's tons of different ways of triggering a trade. These are just a couple. We're not saying that these are the only ones. There's many of them out there. These are just ways of doing it. So in this case, let's take a look. We have the value area high on this day, and the value area low. This is Friday's profile. So we had low and high, and then we have the high a day at 44.46 Okay, the trigger would be that we have a price that moves outside of value and then moves back inside of value, and that candle closes. Once a candle closes inside of value, you could have taken the trade. At this point, that trade would have been in around that 44.37 area, and your high would have been back up above the highs of the day at 44.46 with about 10 points of risk. And you can see this had rolled over very nicely. You could have maybe taken a little bit off of here, but you're looking for a larger move. You're looking for a move back in maybe the daily, the previous day's profile. But you can define your risk, okay, and you can have a nice entry in there. Now if price were to roll back up and taken out 44.46, you would have been stopped out on that deal. That's trading. You will take stops, okay, but the key here, and Matt again talked about this in his YouTube video about not being perfect, is find areas of interest. Find your ways to enter those trades. Understand you could take risk, and there's a good chance you may be stopped out, but the idea is your winners are multiples of your stop losses. And that is not the only key to trading, but that is a very important key to trading. And so you got to define it. So a trigger can help you if you're struggling with getting stopped out and maybe having your stops too large and you're just not sure when to get into a trade. Maybe you want to incorporate a trigger into the trade. So what about this one I just talked about? This is the area of interest we define, and we really like this area. This had moved up on Thursday into this area, right to the top, but we weren't going to take this trade because I wanted to see price move out of the value area high and then roll back into it, and it never did. So this trade would have never triggered. Then on Friday it started in the area, okay, of that previous day on Thursday, and then of course it moved outside of that value and began to balance well above that. That's a bullish move. Now again, if you are looking to get short and you found an area up here, this was a trigger. You could be short, and we'll have to see if that holds coming up on Monday. We're not sure if it is. So again, 3 triggers. Take a look at those guys. I hope they help you. I hope they help you define some risk there. Let's take a quick look at the markets. Let me quickly roll this back over to my normal situation so you guys can see. These are weekly profiles that we like to show you guys. And when we like to go on 2-hour candles here. There we go. All right, let's start with the NASDAQ. As I said, take a look at this profile. This is crazy chopped up in here. Just nuts. And what we saw is our area of interest. I said last week, if this we just closed, we thought, hang on, this could. We took out these previous week's lows from what, about 6-7 weeks ago, and we almost hit the target we were looking for. We said that's pretty close for science. And then of course we gapped down. We went into the area that we were looking for as a target. If that was your entry to get long, that was a great way of getting long. You could easily have gotten long into this, and we had a phenomenal move back up here. We were keeping our next area of interest short way up here because we knew the volatility is going to be crazy. Now, I never thought we'd get up there, to be honest. I thought that was quite a big ways. I thought the market was a lot weaker. But hey, what do I know? All I know is that we look for areas, we try to execute from those areas, and if it doesn't work, we move on. The market is not unpredictable sometimes, but the market does what it's going to do. We can only react to the market, and we have to anticipate the market as well. We are anticipating more downside from this area, but it didn't happen. So what now for the NASDAQ? Well, at this point, we're going to sit tight, and I don't see an area here that that is really interesting to me. We're back into this range again, and now we're popping back and forth. Let's go take a look at the daily chart on the NASDAQ. We have we have sort of this rounding top right here, guys. Technically, we've built quite a bit of balance here. We've tested up on that upside. It feels like it wants to come down and test the value area down in this 38.56 area. But there's many people and many pundits saying this thing wants to go up. I don't have an area here. 45.19 would be an area of interest. If it gets above, I will say that if it gets above that 45.35, then the path of least resistance will be to the upside, and we most likely will see that 47.39. So for right now, we're going to see how Monday shakes out. If there's something that shows up, an area of interest, we'll go ahead and record a quick video and put it out there on social media and of course on the website, so stay tuned for that. The ES is the same way. It had a nice big move. All the indexes had a nice big move last week. Oh, the one thing I will say, let's go back. I did notice this, and I noted it right here, and I wanted to cover it. This low down here, this needs some cleaning up down here. And remember, I talked about cleaning up lows. We talked about it on the crude trade a week ago, and I'll show you that as well. They poked it down here, and I suppose you can say they cleaned it up down here. I'd like to see more cleaning. I don't think this is done to the downside. Now, that doesn't mean it's going to hit it this week, and it doesn't mean it's going to hit it next week. Eventually, they'll come down and clean this mess up. When? We don't know. Okay, ES, same thing, almost looks identical. However, it didn't sell off as much as the NASDAQ did into the close in the late afternoon on Friday. It did produce a little bit more volume at the top here, which would maybe indicate that we have some more upside here. We will see. We did close, if you remember, the night before the Brexit vote was released, they did jam this into the close up here and closed it on the absolute highs and then gapped her straight down the next morning. This 2113 is probably a target for a lot of people, so we'll watch and see if we get that in the opening session of Globex. I'm going to say Monday night, not Sunday night, but we'll see. So that's something to keep an eye on. This is just like the NASDAQ. There's just nothing here to participate in. We have to wait a day or so to see how this shakes out. Plus we have FOMC minutes this Wednesday, and then of course unemployment. So this week may be a little light with the areas of interest. All right, let's go quickly to crude. Alrighty, crude. Crude right now, we still the area of interest is still short here, guys, or should I say the direction of interest. Now, if you were short into our original area and your stops are above here and you're still there, okay, congratulations. You may have been stopped out if you were trailing down. At this point, we are still watching this area. We're going to move this area a little bit wider now. We're going to say, hey, 5038 area. And then I like, if I can get this to move, there it is. I like the 58, excuse me, 50, let's just say 50-50 area down in that 4960 area. That's a big area. I like that area though. If we can stay below that area, then we could trigger short. We still have targets at 45, 43, and then we have a area of interest down here that we would look to get long at down at 42, 41. This still may take a little while, guys. However, if we break up above this area, that 50-50 area, all bets are off to 51.34. Alrighty. Okay, here we go with the euro here. Of course, lots of stuff happening with the euro and the currency. Now, we said, hey, we need to, our area of interest is up here to get short. We like the downside on this. This thing, of course, balanced nicely in here. We thought there would be a little bit more volatility in this the week after, but apparently not. However, it didn't recover like the indices did in the United States. So again, we feel that there is more downside to this. We'll have to see. Again, we're watching this area of here. I think if it gets up in this area, it's worth a shot with a risk above the area about that 113.71 area. There's some this is a flag. I will say this for you technical guys. This is a flag right here, which would not what I wouldn't call it a greatly defined flag, but it is a flag nonetheless. However, anything with the central bankers talking technical stuff sort of gets thrown out the window. We've seen it go all over the place and break technical patterns all the time with these guys speaking. So I'm going to put less emphasis on a technical setup than I am. I'm just going to watch volume and watch areas of interest right now. This is our area right here. We're going to hold to that. If that does if this holds the market down, then we have a great chance of hitting this lower value area at that 108.93. Alrighty, gold. Goldilocks is still on fire. She is cranking. Now, she did balance a little bit, and she held above, way above our area of interest down here that we talked about. Now, we have to watch this. We have this unique situation here where they come down and they tested this 1312.80 area twice, and it held. Next time down, most likely it'll want to visit the 1301 to clean this mess up and test the higher value area. However, path is still to the upside at this point, guys. We think that it's just a pause before more is happening. I'm going to move this up. I like this area right up here, the value area. If we can stay in here, I'm going to give it a little bit of room here because we have a big area. We have some volume here still. So if we can stay above 1290 to that 1300 area, then we like the upside. So here's your risk area for the gold. We believe this is a good opportunity to get long again. We think gold is a play that's gonna last a little while to the upside. So again, nice area there. Keep that on your charts. I'm not going to cover the bonds, but I will cover the notes this week. I'm going to take a look at this. We thought the notes had more upside. They took out, of course, the highs on that Brexit vote. It was very volatile in here. Now, again, they're balancing right up in this area. We believe they have a shot to hit up to that 134.06 intraday. There's a lot of nice volume up here, so we think they could be building another leg to the upside. If you're not long in here, this is not the place to get long. I'd like to see a move back down into this area here and have it hold again and then roll back up. I don't think it will come this far down. However, right now we're just sitting on the sidelines. It's going to be the same thing with the bonds. We're just on the sidelines watching watching this. So stay tuned for that. And then lastly, let's quickly look at corn. I want to point something out about corn and trading. Originally, we saw this, or I actually say Josh saw this, which was the $3.78 area, and we wanted to get long in here. We got long. We looked for targets at 400. We had a target at 410, and then if you were trailing, we said keep trailing until you get taken out. Well, you would have gotten taken out eventually, but I want to show you here what the profile can do for you and how it can help you identify not only entries and exits, but stop, or excuse me, exit is a stop. So if you are trailing a stop up, and you can trail a stop a lot of different ways. A lot of people use a lot of different methods. One of our favorite ones is, once you got a good profit going, put your stop below the most recent day's low. In this case, was it 1, 2, 3, 4, 5, or excuse me, 1, 2, 3, 4 weeks ago, you could have put your stop just below that $4.20. Okay. Now, you had 2 days of consolidation here. It was 2 inside days, or 1 inside day, or 1 inside week, excuse me. And then, of course, we busted out of that, and we absolutely just cranked it down here. So here's the deal. If you were long and you didn't put a stop in and you just did the blind trade situation, not only would you be underwater, but it would be very painful at this point in time, just because you had a great trade, you didn't take profits, and you didn't roll your stops up. This is called managing your trade, guys. You got to do that. There's just no way around it. And you know what? You will not get the exact top, and you will not get the exact low. That's part of being flexible. However, if you did get this was a great trade, and you took some out of the market, and that's what your job is, to take some out of the market, manage your trade correctly, and control your emotions. Now, where are we? We're down below that $3.78 area, and now we've come back down to where exactly the POC of that larger profile. And because this is new corn crop, this is I think we've rolled now over into December crop here, so most likely we're going to hover down around these levels, and we could even go further down. Right now we're getting some word that supplies are going to be ample off of this crop that's coming out, that's going to be harvested this fall. We don't think, but we're seeing a lot of good things coming out. There's no drought, there's no over raining. If you've driven by a cornfield anytime recently in the Midwest, you know that they're just, oh my goodness, they're growing crazy. Actually, out in the West here, we have some corn, and I couldn't believe how big it was when I drove by it, and we are dry as a bone down here. So corn is looking pretty good, hence the reason we're seeing a lot of movement to the downside. That's it for this week, guys. Most important thing this week is, of course, watch the news. We have big news out, FOMC, and of course employment situation, and hopefully, guys, the triggers help you. One thing you want to do is, if you're still struggling and you're looking for more videos and more help, for one, give us a shout here at the marketprofiletradingacademy.com. Go to the home page. We have some great resources. One of them is the 7 Secrets of Trading Success ebook. Go ahead and register, and it'll be sent to you for free. And again, go over to our free resources page. Down here we have lots of stuff that we post to the blog. We have stuff on psychology, execution, if you're new, all these videos are recorded and stuff. Just go in here and dig around, get the information. You have questions, contact us. If you want to see something on the videos, a certain instrument or something, go ahead and drop us a note. We'll be glad to take a look at it as well. Other than that, if you're in the United States, happy 4th of July. Around the world, have a great long weekend. Good trading next week, and we'll talk then. Take care.